I think today is a day for getting names crossed up, but let's hope I remember all of my viewers' names who have tuned in. By the way, if you're tuning in for the first time, the numbers that you see on your screen are where you can get in touch with us. The number up there is where you can send us your messages, and that number is where you can call us, and we'll take all of your questions over the course of the day. It's an interesting day of trade, if you can call it that, because you have the Nifty 50 that's currently trading with cuts of about 0.2% off the low point of the day. And interestingly, there are 37 advances on the Nifty 50, led ahead by earnings. Of course, Reliance Industries was in focus, up about 2% or so, and it's really contributing to a bulk of the points on the Nifty 50 right now. You have BPCL that is edged past and is now the top gainer on the Nifty 50. Also Hindalco, 36 stocks on the Nifty 50 gaining. But the two stocks that are proving to be a weight on the benchmark on the downside are Axis Bank, which is the worst performer, down about 5.3%, and Infosys, which is down about 5.2%. Both of those reacting to the numbers. I'm guessing quite a few of you have questions about those two stocks, so I encourage you to write in and ask them. You also have ICICI Bank and Kotak Mahindra Bank from the private banking space, which are under a little bit of pressure. For Axis Bank, of course, the headline numbers were more or less in line, but the question mark had to do with gross slippages, which is the new bad loans that emerged during the quarter, and pressure seemingly in the agri book, that is the agricultural loans, as well as the retail loans, which are proving to be a little bit of a challenge for that bank in the quarter gone by. Broader markets are doing better than they were at the start, certainly, and you have both the mid-cap as well as the small-cap index that are trading in the green. Small-cap index just about so. So recovering from sharp cashes at the start of trade to trade more or less flat to positive as well. In terms of sectors, let's pull that list up as well. IT, understandably, is the worst performer right at the bottom of the screen. But then the picture is looking better already than it did even an hour back. You have the Nifty Bank that is down under a little bit of pressure, led by Axis Bank, and all of the constituents were in the red. But you have that index that's down about 1.4%. And you have the finance pack as a whole that's doing not too well in trade. What's doing well is realty, and you have a couple of brokerage notes that have come through upgrading certain stocks. Macrotech was one of them. The entire pack is up about 1.6% or so, and certainly something to watch heading into the new year as well. Oil and gas, metal, energy, FMCG, all doing well. FMCG, by the way, bouncing back from yesterday, Mahima.
Absolutely. And bouncing back in how? And in fact, before I go to Nifty FMCG, let's also pull up Nifty Realty counters and see which of these counters are doing very well. Since the business updates, Q3 business updates of Nifty Realty are in, Nifty Realty has really bounced back. Nifty Realty was under pressure in FY25, but it's doing well since the start of 2025, and we are seeing Macrotech, Suntech Realty, Prestige, all of these counters gaining. Both Macrotech and Realty up around 5%. So these counters doing well in real estate space. Some other counters which are doing well, in terms of stock performance on the back of earnings is Havells. Although the earnings for Havells was not very impressive, the stock is reacting well. We'll wait and in fact it's kind of cooled down from its day's high, but we'll wait and watch out for the management's commentary on con call as well. We also did an interview with the management. You can see the interview on YouTube channel of NDTV Profit. But something that's doing well is also HFCL on the back of order win. There's Easy Trip Planners, new project in Ayodhya, doing well on the back of that. Lemon Tree Hotels is another counter which is also kind of seeing small gains in the trade, again on the back of new key additions, new agreements for their hotels. Mastek is another counter, while IT space, Infosys is kind of weighing down on the index, but Mastek did open with a good amount of gain, but it's cooled off and it's down around 2%. Some other counters, which are kind of under pressure include TVS Motors, KPI Green, Scient, and Borosil Renewables as well. Moving on to the first query of the day, Shweta from Hyderabad is calling in. Shweta, a very good morning to you. Thanks for calling in. How can we help you?
Hi Mahima, good morning. Good morning, Alex.
Good morning.
My question is regarding transformers and rectifiers.
Okay.
I bought 90 shares at 1106.
Okay.
I want to know the fundamental analysis of the share, whether it is good to hold for 6 months to 1 year.
Okay. Shweta, when you bought transformers and rectifiers, what was the kind of thinking behind it?
Because I've been following your channel since very long time, and I've been hearing experts saying the power distribution and power infrastructure stocks are going to do well. They have huge potential for growth. So among this, I spotted this transformer sector as a good stock.
Okay.
So,
Shweta, I got your question. It's just occurred to us that we've not really introduced our experts of the day, and that's a miss on our part. Samir Dalal, Natwar Lal and Sons, stock brokers, as well as Kushal Gandhi, technical analyst at StockSbox. Always a pleasure, and sorry, gentlemen, for keeping you waiting. Good morning to you and happy Friday. You've heard the question. Samir, I'll come to you on Trill. It's turned out to be quite a favorite among a lot of people tuning in, and of course, it's had it's rewarded a few people that got in early. What's the prospect going forward, though?
Yeah, so it has rewarded a few people who got in earlier. And, basically, we've been saying on your channel also for some time that, look, the power sector is going to see good amount of capex investments going forward. Now, transformers and rectifiers caters to that segment. And as you get more of these substations, these lines, and all of these things put in place, the business will do well. So we believe the operations can continue to grow. I mean, if you look at the profitability, it's shown decent numbers in the last 2 quarters also. The problem we have is simply valuation. The stock has probably run up far more than what the valuation, what the fundamentals justify. Now, given your person has only a 6 month to 1 year view, that's kind of slightly short term, and it will take a lot longer for the earnings to catch up to where the valuation stands. So am I expecting a near-term bounce in the stock? Probably not, given the fact that we are already trading at some amount of premium. We need to see either a sideways correction or maybe a downtick in the stock for valuations to become more reasonable. If you have a longer term view, maybe a 3 year view, I think one could probably hold on and on corrections buy. But in the next 1 year, difficult to say that the person is going to be making money on the stock. I mean, technical analysts could probably give a better view on that. The fundamentals are fine.
Okay, why don't we do that then? Kushal, I'll come to you on the charts for Trill. Is it a hold for you at this juncture?
I would hold with a very tight stop loss near 957, simply because, the last week, the declines that we've seen, they've been on some incremental volume. So I feel this can be some sort of profit booking at the current juncture. So my sense is I can only expect a positive move once the record highs are taken down. That is near 1297 levels. So until then, it's a hold with a strict stop loss. But yeah, some profit booking is due in the stock.
Okay. Quite a few of you have written in on the WhatsApp number, and we will attempt to take as many of them as possible today. But just a reminder, what you see on the bottom of your screen right now, this message, it's for you to write in to us. We've got a special event lined up for you on the 25th of this month, which is next Saturday. And this is where we will showcase some of your questions, and I'm sure that they will be quite interesting. What we want you to do is to hold the phone up and use the horizontal view, record a message on video, and we might just play it out on television. You'll get your chance to be on national television. That's one incentive. Of course, the other and the more important one is that we have a panel of experts, the who's who of Dalal Street, in fact, will be in studio, and they will be able to answer all of your questions. So that's the other incentive that you should be aware of. The next question we will take is a stock in focus. We spoke about it, Reliance Industries. We've got a question from Vijayawada, and bought Reliance Industries at a price of 1,252. Will the stock, or should you hold the stock? I'm going to take a fundamental view on this one. Samir, did you find that you were positively surprised with the results? Retail certainly was an improvement. O2C better than expected. Are you holding from now?
Definitely, I'm holding on. So yeah, did I see anything very positive in the earnings? Probably not. They were a good set of earnings. What we liked and what we wanted to hear more was from the telecom business, which obviously has delivered decent profits, but we were hoping for more data on when they would look for the listing, because that would be the value unlocking, which could lead to a re-rating in the stock. So Reliance historically has always been a B2B kind of a company, and with these two new businesses of the telecom and retail, they've become very retail focused, and I don't believe that they're getting their fair share of the valuation multiple that retail businesses in India command. They are the leader in the telecom space. If I just compare the valuation multiples of Bharti, and if I just extrapolate based on certain profit numbers of Jio, I think the valuation for Jio could surprise us quite positively if they were to be given similar multiples, and that could lead to a re-rating in Reliance Industries itself. The oil business also in the current quarter, we could have probably hoped for more, and we believe that it could get a little better going forward as the GRMs continue to improve. Of course, it's taken a bit of a small decline in the last couple days, but I believe that they will all bounce back, and the GRMs will do well. Reliance has also signed a deal with Russia with a Russian company for importing crude oil from there, which will be at a fixed particular rate, meaning not fixed, but there's some agreement in how the pricing will be, and which will allow them to have better GRM. So I believe the profitability for Reliance will continue to grow, and I would definitely hold on.
Okay. All right, definitely hold is a view on Reliance Industries. It's had a rough couple of weeks, in fact, a couple of months as well, but hold is a view on the fundamentals. Nipun is calling us from New Delhi. Nipun, good morning to you, and how can we help you today?
Morning and happy Friday to you.
Wish you the same.
My concern is that I've been holding Adani Power. I entered Adani Power at 685. And now with Heidelberg report out of the way, how do you see the stock performing, one, in near future, and second, in long term?
In the long term. All right. So you've gotten in at 685 levels. The stock is currently at 564. I'm guessing you, when you define long term, what are you thinking?
I'm thinking a couple of years because I don't want to go longer than that.
Okay.
I believe a couple of years should be a safe bet.
Yes. Samir, on the fundamentals then, from the long term, earlier on in the day, we had someone point out that Adani Power has solid prospects in terms of the growth that you have in the sector, and you also talked about power as a theme that you like. Would you hold?
So we don't have active coverage on Adani Power at the moment, but like I said, in the power sector, I'm quite positive. Adani is expanding its capacities quite well, be it on the green side, but then the green side doesn't come into directly in Adani Power, but they're also going to be looking at putting in some other sort of capacities. So I think the power sector is going to do well, but I don't have active coverage on it. So I wouldn't be able to say what the long-term prospects of the company would be, but power sector is doing well.
All right. Kushal, any view on the technicals then on Adani Power? 685 is a buy price. What's the advice that you have?
Well, positive on Adani Power from a short-term point of view. Now, the move that we saw on 14 January is a very nice indication that tells you that the passive buyers, following a 51% decline, the passive buyers are now getting active. So I have a positive view from a short-term opportunity for a target price of 629, which is a 200 DMA acting as overhead resistance. So I believe once that resistance is cleared on a decisive, in a decisive manner, then I'm expecting further on the upside towards 760, 765.
All right. Standard disclaimer, of course, NDTV Profit, part of the NDTV Group, and we have been speaking about the Adani Group of companies. This is an Adani Group company. We've got Infosys in focus, of course. The stock is getting absolutely smashed in trade today. No other word for it. It's down as much as 5.5% on the back of the earnings. We've gone into the details, of course. So the question really from Raghavendra in Bengaluru is, should you buy the current market price? Samir, there is a reason why the stock is getting beaten down right now, and it was in the earnings, despite the fact that the management has indicated an increase in its outlook for revenue. Fourth quarter is expected to be a little bit weak, and the guidance, or not, rather not the guidance, but the fine print in terms of what contributed to the revenue in the third quarter really is what people are focusing in on. Would you say that it's a buy right now?
So, for a while, we've been saying that IT companies are trading at very high valuations, given the fact that they've been growing their top lines at 4 and 5 and 6%. As long as these companies are not able to accelerate their growth, and I think it's going to take a little longer than 1 year for them to reach mid-teens kind of a growth. And also, you got to realize that the base has become quite big. So, two things. First, we are seeing this transformation that's happening to AI, where Infosys, of course, is focusing. But I think it's still very early days to see if Infosys is able to capture a decent size of the market, which will allow them to accelerate the top line growth, because the traditional businesses are facing a bit of pressure, right? I'll say the growth is facing pressure, not the business. Now the positive is that they signed good amount of contracts in the current year. I think quarter they did about 2.5 billion US dollars worth of contracts, which indicates that the revenues will continue to grow going forward as well. But we need to see whether it's 6, 7, or 8%. Now the two negatives: one, we have Donald Trump coming in on 20th of Jan. There's a big worry that he is going to push for more employment onshore, and that could also be without the H-1B visa. It's a very strong possibility. He's done this in the past as well. If that happens, it does hurt the profitable margins of all of the IT companies, Infosys as well. Second, what I discussed at the beginning is this is a company trading at 26 times earnings. Current year, and if you go 1 year forward, about 23 times based on certain projections. Now, when you're trading at 23 times and your growth is 5 times, you're trading at a PEG of 4. These are B2B businesses. It's very difficult to justify these high valuations. I agree the cash flows are great, and there is growth opportunity and all of that, but to trade at a 4-time PEG and believe that it's sustainable over a long term is difficult for me to fathom. So from that point of view, I would be avoiding to buy a Reliance, by buying an Infosys at this point. But yes, at maybe 1600 odd levels, if it ever comes, I don't know if it will, because there's a lot of demand in IT at the moment from the markets. But if it ever comes, that would be the time I would probably like to look at it.
All right. Quite a comprehensive view on Infosys coming in from him. Moving on to the next caller, Durga Prasad from Hyderabad is calling in. Durga Prasad, a very good morning to you. How can we help you?
Yeah, very good morning. I just bought the Canara Bank for the 1,050 shares at the price of 109.21 average price. I'm looking for the long-term view. Can you please tell me about this?
Okay, before I move on to the guest, can I please know as to what was the thinking behind buying Canara Bank?
Yeah, I think it's a fundamentally good stock, so I just picked up for the long-term perspective.
All right, and you want a long-term view on this?
Yes, correct.
All right. So fundamental view is the call, and I'll take your view on this. Just a second. Samir, I'll take your view on this.
Yeah. So we've been very positive on the entire banking and financial services place. We've seen a very good correction that's come in over the last maybe 3-4 months. And this is also because we are seeing deposits being a little slow. We are seeing some amount of stress coming in from the retail book. Axis Bank very clearly described it. And we believe that could also be the case that happens with some of the PSUs. Like Canara and all. But net, we remain very positive. Canara Bank is one of the better PSU banks, well managed, trading at 0.9 times price to book. We believe the growth will come through when the growth for the banking industry starts seeing an uptake. Once the government infrastructure projects start seeing more uptake, we'll see the loan book starting to grow. Once that starts happening, then people will probably start re-rating it. So I would have a buy on Canara Bank at this point of time. If you can add it, and if you've bought it at higher levels, you should please average in and stay invested for the next 2 years. I think there's good money to make. Having said that, since it was a specific question on Canara Bank, I'm answering as buy. But if you were to ask me, it's not our top pick in the banking space. We still prefer the private sector banks, HDFC, Indus in that order for the large and mid. Slightly mid, and then in the slightly smaller bank, IDFC First Bank is our top pick. In the PSU bank also, the bracket, Bank of Baroda remains our top pick at this point of time. Canara is second in line because of valuation and growth and all of those aspects as well.
I kept saying IDFC First Bank, and then you said HDFC Bank and you said IndusInd Bank, and I was waiting, when's the IDFC First Bank call coming? And then it finally did. All right, because they were getting ready to fire the tickers, Samir, and they,
So it is my top pick if you ask me from the next 5-year perspective, given the kind of growth and given the kind of deposit base that they're able to grow even in this tough market scenario. They've done a lot of provision. They have a lot of opportunity to grow their names because of the high cost borrowings which are getting repaid. But from a safety angle, HDFC and IndusInd always have a better, as in your personal portfolios, you can take a little more of risk and put these. But for investors who are not tracking it on a regular basis, being in an HDFC and IndusInd is like kind of a no-brainer.
Particularly based on the kind of valuations they are currently trading at. A lot of people have spoken about IndusInd from that perspective. Sarath is writing in, he's got Quadrant Future Tech. Let's pull up the long-term charts if we can, possibly. He has bought in the price range. So he's bought in the price range of 290 and he's making quite a bit of money. The stock is currently up as much as 18%. So he's a little bit worried as to whether or not he should keep holding on to this. Kushal, bear with me. I know that you probably don't have enough data on this, so I'm going back to Samir on this. Would you book profits, Samir?
Actually, I have no information about this company. I've never studied it, so there's no point in me.
Okay, so would you say this then? If you have a very large exposure to this one company that is new listing, and it is as a result of the move that it has had, moved substantially beyond 10% of your portfolio, would you take money off the table?
Once again, it's not necessary that you should take money off the table just because a stock has crossed 10%, because if the fundamentals are good and the company is doing well and has good growth opportunity, you can stay invested. I mean, I'll just give you a simple example. If you look at the portfolio of the late Rakesh Jhunjhunwala, two stocks comprise probably 60% of his portfolio, which was Titan and Lupin. So it's not necessary that you need to be at under 10% in any stock, but as long as the prospects are good and your capital allocation at that time of investment was not the 20% kind of allocation. If you started off with a 5% and just become 20%, that's great. You can stay put if the business is doing well. So everything needs to be seen as a picture, but for all practical purposes, if you feel that valuations are rich and maybe growth is not going to be as good, yes, I would like to say come under the 10% and diversify.
It's a very good perspective, and what a great example to talk about, right? Ultimately, actually, if you think about it, you are buying a share in a business, and for entrepreneurs, it's fairly normal to have just one business, and if you are confident in that business, why not hold more of it? We have to step into a very quick break. We've got more on the other side, so do stay tuned.
I present the budget for a historic
It's nearly time for Budget 2025, and what that means is that there are a lot of proposals that are coming through to the Finance Minister, and among them, there are proposals from the mutual fund industry as well. I'll talk about three key changes that they are suggesting. One is a rollback in the tax rates that was announced last year. Of course, last year, the capital gains tax, long-term and short-term, was increased to 12.5% and 20% respectively. The mutual fund industry is saying a rollback to the previous rates would be beneficial because it would incentivize more investors to come through and invest, and those people that have come into the investment fold into the mutual fund industry over the past couple of years will be rewarded for their patience and for their investments. The second proposal has to do with the tax treatment on debt mutual funds. Currently, all capital gains emerging from debt mutual funds are taxed at slab rate, and what that means is that depending on which income slab you fall in, if you're in the highest tax slab and you're paying 30% on the income above a certain threshold, your gains from debt mutual funds are also taxed at 30%. That wasn't always the case. Long-term capital gains came into effect after a period of 3 years, and they were taxed at 20% with indexation benefits. Of course, that doesn't remain the case anymore. So the mutual fund industry is asking for a rollback to the previous tax treatment because they say that the debt market in India is growing, is emerging, and it needs to be incentivized. The third change that they're suggesting has to do with the income distribution schemes. Of course, there are two types of schemes in mutual funds. One is the growth scheme, where all gains are reinvested by the fund manager. And in the second case, which is the dividend distribution scheme, as it used to be called, the income is distributed on an ongoing basis to unit holders. Now, the thing is, income above 5,000 rupees that is distributed in this manner will have to have tax deducted at source, or TDS, as things stand right now. And the mutual fund industry is suggesting that this threshold be raised to 50,000 rupees, and they expect that this will benefit a lot of people because they won't then have to have tax deducted at source. Of course, there are more proposals that they've made, but we'll see what the finance minister takes up when she presents her budget for 2025.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit's research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headline.
Welcome back. You're watching Ask Profit, a show where we get all your stock-related queries answered, whether they're fundamental or technical. For viewers who are just tuning in, you can ask all your stock-related queries on the numbers that are flashing on your screen. You can either call us or WhatsApp us. Moving on to the next caller, Bhuvan from Gurugram is calling in. Bhuvan, a very good morning to you. How can we help you?
Good morning. Actually, I want to know about the DIA tab. Can you hold? I just wanted to hold or just sell it out.
Okay, I see that you have 1,600 shares of Diamond Power Infra and you've bought it at 166 a piece, correct?
Yeah, correct.
Right, and you're sitting on a loss of around 70,000 rupees right now. Do you wish to keep holding this from a longer term perspective?
I think about that, about a vision of 6 months to 1 year. I can hold that.
All right. So then I'll get you a technical query on this. Kushal, I'll come to you for this one. Diamond Power Infra is the counter. 6 months to 1 year, how does it fare on charts?
Recommendations to sell the stock because, following a very elongated distribution phase, the stock has plunged below its 200 DMA and a very crucial support zone here, 125. So it's best to avoid the stock because I'm expecting the selling pressure to continue further.
I'm coming back to you on Adani Wilmar, and this is Shahul who's writing this question. He's bought at an average price of 400 rupees and he's incurring a loss at this juncture. He's wondering whether to hold, average, or exit with a loss. What's the view on the charts, Kushal?
It's a sell recommendation. The stock is down. It's broken some important crucial support zones near 281, and I believe the shorter term moving averages will continue to act as overhead supply. So it's best to sell the stock at the current market juncture.
Anup is calling us from Cochin. Anup, good morning. And I must say, I really like Cochin, particularly the Fort Kochi region.
Yeah.
It's really pretty.
Yeah.
So, what do you want to know about today?
Yeah, actually, I bought Indo-Amine.
Okay.
Shares at 150 rupees, 2,000 shares.
Okay.
So I wanted to know the fundamental view and the valuation.
Okay. You bought at 150 levels. When did you buy? It's not too long back, I guess.
Yeah, just in the recent this correction I bought.
Okay. And 2,000 shares. Quite a substantial amount of shares that you bought. What was the thinking when you bought it?
So this has a diversified portfolio of chemicals.
Okay.
So and also this is giving a good increase in the sales and sales volume.
Okay. All right. Let me take your question to Samir then. Samir, specific comments on Indo-Amines. Would this be the best pick from the space?
Unfortunately, I don't cover Indo-Amines. I think it's too small of a company. I haven't focused on that.
Which is a fair point because it's just about 1,100 crore market capitalization. Then let me ask you this. In the specialty chemical space, a lot of people are saying that now is a time when things are going to start looking better. But, Samir, interestingly, they've been saying that all of 2024. Does that actually come to pass at the start of 2025?
Yes, you're absolutely right, Alex. I mean, we've been in that boat as well. Unfortunately, we've also been saying that, the turnaround in the chemical space is just around the corner. Unfortunately, it seems that the road keeps going straight and the corner is not in sight. But we still continue to remain constructive. We believe that, look, there are certain moving factors which would start changing. Hopefully, starting the 21st of Jan, where certain duties are thrown in on companies in China, where India would then stand to benefit. That would allow Indian companies to probably grow their market share, which would also mean that the pricing pressures that are easing a little bit. So specialty chemicals does remain a segment that we are positive on. Clean Science Technologies is one of the companies that we like in it. They've grown their capacities, which will allow them to grow their volumes. Hopefully, the prices stabilize and move up, which will allow them to grow their EBITDA and profitability because the operating leverages will start playing out. Similarly, there's another company in India, which is also in the amine space per se, Balaji Amines. We believe that the turnaround there also could come in quite soon. Hopefully, the prices stabilize and start moving up. On the chemical side, which will allow them to grow their profitability. But what is more interesting about Balaji Mines is they're getting into a particular chemical which they're going to be making, which is going to be used for manufacturing of lithium-ion batteries. We've discussed this on your channel also before. Now, that obviously will take another 6 months to a year for it to set up and start growing and stabilizing and, leading to the profitability coming through. So it is a slightly long-drawn story. But they are going to be doing a complete replacement demand. That means at the moment in India, there's nobody making it. We are importing this chemical entirely from abroad, and this will be the only company making that chemical here. So once that happens, and if government does some amount of protections for Indian chemical companies, then I think Balaji Amines is one of the companies that could do really, really well over a longer term. irrespective of whether those protections come or not. But even if they don't, the growth and the growth opportunity is quite strong. So we like Balaji Amines and Clean Science Technologies, two of them in the specialty chemicals.
Yeah.
All right. That's a very interesting take and very comprehensive one on the specialty
Balaji
chemical
Amines
space.
right now not trading, anywhere close to its 200-day moving average is significantly below. So if at all, why don't I just do this, right? Kushal, why don't we round this off? Because I think this would benefit a lot of people. Samir has given us a comprehensive view on the chemical space. Can you give us a sense on when, according to you, based on the charts and chartically, Balaji Amines would be a buy for you?
Well, Balaji Amines, you see, it's almost trading 40% below the record highs, and it's quite near the demand zone. 162 to 152 levels is an excellent demand zone, and I feel if this level is sustained, I feel there's a reversal on the cards. So my sense is to hold on to the stock with an immediate stop loss near 152. Let's say the stock decisively close above 160 to 165 levels. That's an indication to start accumulating further.
We're talking about Balaji Amines, right?
I'm talking about Amines.
No. So I want to talk about Balaji Amines. Where, according to you, is the right moment to buy?
Balaji Amines, I have a negative view. I mean, the stock has been trending with lower highs and lower low structure. So I feel the selling pressure might continue because the shorter term moving averages on weekly and daily both, they continue to act as overhead supply zones. So any meaningful recovery is getting rejected, and I think this phenomena can continue further.
So not looking very good on the charts. Balaji Amines is the counter. Moving on to the next, stock, which is BSE. Gauri from Dubai has 4,900 shares of BSE, and she's bought it at the levels of 130. So she's sitting on a significant profit of over a lakh rupees.
She's got 130 shares at 4,900.
Okay, bought it for, So she's got 130 shares bought at 4,900 of BSE because the stock is trading at 5,935. So she's still sitting on a profit of 1,35,000. And she wants to know as to, what could be the long-term perspective for this particular counter. Samir, a lot of brokerages are positive and have remained positive on this counter. And, in the recent past, they've also upgraded their ratings for this particular counter. What is your view?
So unfortunately, I'm on a very different side of the spectrum when it comes to the BSE stock compared to some of the other broking companies. As positive as they are, I think the stock is massively overvalued. Okay, so let's take a little step back and just discuss. Okay, so there are two parts of their profitability. The first part is obviously the core business, which is the trading volumes, which generates revenue for them. And as that keeps growing, the operating leverage plays out, and that's great for the profitability. But that only contributes to about 60 or 55% of the profits. The balance of the net profits comes from the other income from its investments. Now, you can't value those investment income at 50 times earnings because for all practical purposes, they're generating 7% return on that because it's all money put into debt. You can't value debt investments at 50 times earning because then there'll be many companies that will just start making these listings with debt investments and be overvalued. So if I take out the core business and the operating business, the other income part of the business, the stock is trading at 130 times. Now let's look at the other aspect. I believe that yes, they've been able to grow their market share because of the fact that SEBI has restricted the number of options that come for weekly expiry. So, what's happened is NSE's volumes are down, because of which BSE's percentage is looking better. But net, even at the end of the day, now the question comes is, where's the next round of growth? BSE has entered into the F&O segment. They've got a decent share of the volumes. In the cash segment, the volumes are still not seeing much traction. It's still largely all with NSE, the lion's share of the business. They're talking of listing a few other exchanges like in the GIFT City, the BSE, IEX and all that, which will probably bring in some volumes. But remember one thing, whenever a bear markets hit and volumes start declining and these high frequency traders start taking a slight backseat, the drop in top line will lead to a corresponding drop in the profitability as well, because like I said, the operating leverage, which works positively, also works negatively. So for every rupee of revenue that grows, because their cost structure is a largely fixed cost structure, the profits grow quite well. But when that happens in reverse, and that we believe will happen in the next year and a half, we will see a correction, a steeper correction in the market than what we are currently seeing. At that time, I think the volumes will take a further hit, and then these valuations will not be justifiable. So I'm not positive on BSE at this point of time. The stock has obviously had a phenomenal run up. If you go back 2 years, it was, I think, 550, which is now at 5,800 or 900. So you're talking of being 11x. From here, making money in the stock is going to be very difficult. If you ask me, I would like to say it's time to book out of the stock.
All right, book all of the profits that you have on BSE is the view coming in from Samir. Moving on to the next caller, Shankar from Chennai is calling in. Shankar, a very good morning to you. How can we help you? Hi Shankar, I can hear you.
Okay, I am purchased Tata Motors at the rate of 840 rupees 100 quantity.
Okay.
6 months back.
Okay.
And I am ready to hold minimum 6 months to maximum 3 years. Any chance to surpass its previous high of 52-week high of 1200?
All right, Shankar, you want a fundamental answer on this, or do you want to know how the charts look?
Yes, on technical basis.
On technical basis, okay. Kushal, I'll come to you on this one. In terms of fundamental view, the other day, Mr. Tokalingam said that it's better to invest in an FT rather than Tata Motors. But, this year also, 2024 also, it's not done, anything with respect to the stock performance. But how does the charts look right now?
Motors, after a 38 to 39% decline, the stock is now finally showing some resilience to further drawdowns, which is a positive development. I believe the stock can consolidate further to accumulate strength. So I would recommend to hold the stock with a stop loss near 713. I'm expecting a movement above, once you get a breakout about 815 to 820 level is where you find a crucial resistance zone. So once that level is taken out after some mere consolidation, mere accumulation phase, is when I feel the stock might start ticking up. But I think it's a very good zone to hold, and it's a good zone to accumulate with a stop loss near 713.
2024 was a bad year, but remember 2023 was when this is the best Nifty 50 stock. So one would just say cycles, right? Currently, I guess that is one view on the fundamentals, but that could turn. And it could just be one spark from Jaguar. And, in case you don't know this, Jaguar is going through a transformation into a fully electric company. Let's see if that pans out. Vinay from Chikmagalur in Karnataka has got a question on Bandhan Bank, and he's got 250 shares, bought at 252 rupees, and he's wondering whether to hold. It doesn't have a specific time limit. So let me ask Samir whether this is something to hold on the long-term basis. A lot has gone down for this company, Samir, over the last year, not least of which changes in the top management, but also pressure on the MFI space, in the microfinance space. Would you be a long-term investor in this?
Yeah, so unfortunately, Bandhan Bank has been one of the stocks that have disappointed us as well. So at 200, we actually thought, when the management came out and did this aggressive, just before the previous chairman retired, he did a very aggressive provisioning round, saying that I'm cleaning up the books so that my next in line doesn't have to go through these problems. Unfortunately, those problems continue to persist. And now with this MFI issue lining up, it's seen more of pain. So if you ask me, sometimes it's better to cut your losses. I'm not denying the fact that values are damn attractive. And, if they are able to turn around, I think this could be a stock that could perform really well. But sometimes, when a company continuously underperforms and doesn't deliver what they've promised, it makes more sense to find something else to invest in. So I would say, although valuations are cheap and prospects are good, sell out and buy into another bank where you could probably recover your money and make some.
All right, so there you go. And by the way, Samir has already listed out the stocks that he likes in the financial space, so you can pick any of those. We've got a caller coming in from Hyderabad. I believe Dheeraj is calling us. Dheeraj, good morning. How can we help you today?
Hi, sir. Good morning.
Good morning. Please go ahead.
Sir, I would like to accumulate Netweb Technologies at current levels.
Okay. Why?
The reason is tomorrow they're announcing their results, and since last 1 month the stock has been correcting a lot. Like from levels of 2,900, it have been around 2,350.
Okay. And so, Dheeraj, what is the time frame that you want to buy this for?
For the next 6 months.
Okay. Just a small request, Dheeraj, please don't call me sir. You know, in case you're a football fan, there is only one Sir Alex. Let me take your question to Kushal on the charts then. Kushal, what would you do with Netweb Technologies? It's down about 4% in trade today, 4.4%. It's been under pressure. Would you buy right now?
It's a selling recommendation from my end simply because the stock has been, undergoing an elongated distribution phase, and it's been constantly losing its relative strength as compared to general markets. And all the technical indicators indicate waning of bullish momentum. So it's a sell from my end.
It's a sell on Netweb Technologies from Kushal. Moving on to the next query that we have. It's Coal India. We don't have the name of the person. There is some. Okay,
yeah, but
we
that's
don't have
not
the
name.
Yeah, that's not the name. Okay, so Coal India is the counter, and 3 to 6 months is the time horizon. He's not mentioned whether he's bought the shares or not, but he wants a short-term view from 3 to 6 months. So Kushal, I'll have to come back to you again. How does it fare on charts?
Hold this counter simply because the shorter term moving averages are acting as constant supply zone, and any meaningful recovery has been rejected there. Secondly, the stock is having a negative crossover between 50 and 200 EMA. So even from a medium term point of view, the stock looks bearish. So it's an avoid recommendation.
All right. So that's the view coming in on Coal India. Sonu Kumar is the next caller who's calling in from Jharkhand. Sonu, a very good morning to you. What's your query about?
Good morning. Good morning, ma'am.
Yeah.
I want to know about the IRB Infra share. I have brought it 74.17.
Okay. And you've bought 1,300 shares, I believe.
Yeah, 130. Okay. 1,300 share, ma'am.
Okay. And how long ago did you buy them, and what's the kind of thinking behind buying IRB Infra?
I have brought it on June, and I can hold it for 2-3 years.
2-3 years. Okay, Samir, I'll come to you. IRB Infra is the counter. The business update was decent but not very impressive. What is your view on the counter?
So we are very positive on the entire infrastructure space going forward. You know, we've had a current bit of a slowdown from the government when it comes to fresh orders being assigned. And we believe that you'll see the traction of that picking up going forward. They are more focused on road development. Actually, it was Indian Road Developers, the original name of the company. As we see more of these road projects being assigned and getting executed over a period of time, you will see the profitability for the company growing. Problem is, your caller has bought it at a very elevated level when the run-up was quite stark. So it becomes, like I said, whenever you buy something after a huge run-up, it becomes difficult to make money. So even if he stays invested for a year and a half, I think he'll barely just recover his cost. So any corrections, if he wants to, can be used as a buying opportunity and averaging up the stock a little bit and then trying to exit, closer to 65, 66 levels, at maybe cost to cost once his average comes down. But am I very positive on the long term? No, we are positive, but IRB at that price, very difficult to make money. From the 54 levels, yes, it can go up, but probably, for him to get more than 74 and get to 15% CAGR returns, very difficult to. I don't think that's possible, to be very frank.
Another stock that you might have the same opinion on, Samir, is BEL. And Ankush from Bengaluru has bought at level of 290, 326 shares is what he's got. He's thinking about whether to hold or buy another 200, taking a long-term perspective, and he defines that as 1 to 3 years. It seems like he's recently bought. So would you suggest that he takes the opportunity to move to something else, or do you think that holding for 1 to 3 years is a good idea?
So BEL, if he holds for a 3-year point of view, I think he could generate some returns. Look, the valuations are not overly absurd, which is there in some of the other counters. I'm not saying it's cheap, but it's not overly valued. But once again, Indian defense orders are going to continue to see more traction. BEL is the leader. They control a huge share of the market. And we believe they will continue to get their fair share of the orders and grow their profitability as well. Look, these are very profitable companies at the end of the day, so it's good. But if, again, I were to give a view, is probably a sideways movement for the next 6 months to a slight downward movement could happen. And if you get the stock around 240 odd levels, I would say add on to that and build a slightly larger position with a better average price, and then you will probably be able to make really good returns over a 3-year period. So stay put and buy at lower levels.
So patience is going to be key, and you might just be tested in the next 6 months is the sense that I'm getting. It is time to hit the rapid fire segment, and Kushal and Samir, this is where we throw as many questions as we can at you over the course of the next 2 minutes. Do keep your answers as crisp as possible. LIC Housing Finance is the counter we're looking at. Shankar is asking this. 1 to 2 years is the time frame. Would you buy at what price? Kushal?
This from my end.
All right, KPIT is the next counter. The person has bought 5 shares, bought at 1370 a piece. He wants a long-term perspective on this. Samir?
Buy.
Mazgon Dock Shipbuilders bought at an average price of 2445. Would you hold or exit? Kushal?
I'll hold the stock.
Sorry?
Hold.
Hold.
Okay, Ganesh from Chennai has a query on BCG shares. The stock is under ASM is what he's saying. He's bought at 15.75 a piece. He's holding 1,000 shares. The question is, when will it bounce back? Kushal, your view?
It's a simple stock is on a downtrend.
Okay, interesting, because you've named or you've spoken about a couple of these stocks. Samir, HDFC Bank bought at an average price of 1,527. Would you sell that and add Bob and Canada?
No, I'll stay with HDFC.
Okay.
Okay, Niva from Chennai wants an outlook on NMDC from a longer term perspective. Samir?
Which one?
NMDC is the counter.
Samir.
Samir?
I think one can hold on to it.
All right.
Okay, Cyient bought at levels of 1,760. Hold or sell for the long term? Sumesh wants to know. Kushal?
Hold very strict stop loss near 1665.
Okay.
All right. The next counter that we have is ZF Commercials. How does it fare on charts, Kushal?
Well, I don't have an outlook on this. I'm not able to pull the charts.
Okay.
All right.
Suzlon is the name of the counter. 64 is the buy price. It shouldn't be too far away from the current market price. 4,600 is the buy quantity. Would you hold or exit? Samir, on the fundamental?
Buy more.
Buy.
All right. PG Electroplast is the next counter. Average price is 975. What can he do next? Buy, hold or sell? If you have your charts back, Kushal.
Hold on the very strict stop loss near 810.
Okay, hold is the call on PG Electroplast. Gentlemen, thanks so much. We're out of time on the rapid fire segment and in fact on the show. Thank you so much as always for joining in. Happy Friday to you. Talk to you soon. All right, that brings us, always a pleasure. That brings us to the end of this edition of Ask Profit, and it was an interesting one. Hopefully you got some of your answers, and if you didn't, we'll be back next week to take all of them. So we'll see you at that point. There's lots more over the course of the day, so I'd encourage you to stay tuned. This is NDTV Profit.
Everyone, with Budget 2025 right around the corner, there's one question on everyone's mind. Will this finally be the year salaried individuals get some much needed income tax relief? Let's dive into the story behind the tax slabs, the rising cost of living, and why economists are calling for reforms. First things first, Budget Day is set for 1st February 2025. expectations are sky high, especially among salaried individuals. But before we talk about predictions, let's rewind a bit. The first big moment for taxpayers was back in the union budget for FY 2020-21. That's when the government introduced an optional personal income tax regime with lower tax rates but fewer deductions. Remember that? It shook things up for taxpayers who had to choose between the old system with deductions or the new simplified one. Fast forward to 2023 budget, Finance Minister Nirmala Sitharaman made some tweaks to the new tax regime, expanding 2 income tax slabs and increasing the standard deduction from 50,000 to 75,000. Sounds promising, right? But here's the thing. It didn't touch the old regime at all. So what exactly is standard deduction and why does it matter so much? Think of it as a fixed amount you can subtract from your taxable salary. It's meant to help with everyday work-related expenses. While it's been raised over the years, the question is it enough to combat the rising costs we're all facing today? Did you know the standard deduction was actually scrapped back in 2005, but it made a comeback in 2018 at 40,000, and since then it has been climbing steadily. Now economists have a big ask for budget 2025. Cut income tax rates. Why? Lower taxes means more disposable income in your pocket. That extra cash could boost savings, increase spending on essentials, and even revive demand in sectors hit by sluggish consumption. Sounds like a win-win, right? In fact, during a recent pre-budget meeting, experts suggested exactly this to Prime Minister Narendra Modi, arguing that it's time to ease the financial burden on taxpayers while stimulating economic growth. As per an NDTV Profit exclusive, the upcoming union budget could bring significant income tax relief with potential modifications to the new tax regime. Sources suggest the government is considering adjusting personal income tax slabs and reducing tax rates for incomes up to Rs 10 lakh to boost disposable income. The new tax regime, which restricts exemptions and offers fewer deductions, is already the default option for taxpayers, with 72% having shifted to it. Notably, the July budget increased the standard deduction to 75,000 and revised both tax slabs and rates. Under the new structure, income up to 3 lakh is tax-free with progressive rates ranging from 5% to 30% for higher income tax brackets. As Budget 2025 nears, there are growing expectations for reforms aimed at easing tax compliance, particularly for NRIs, that is non-resident Indians. Here are the key suggestions highlighted by Deloitte. Firstly, simplifying the tedious process for property transactions involving NRIs. Currently, buyers must withhold tax at a higher rate, obtain a TAN, and file ETDS returns. Introducing a challan statement system similar to residential transactions could streamline the process and reduce the burden on buyers.
Hello and welcome. This is KYC. Well, in this show, we talk to you about a single company every day and take you through how the company has come through in terms of its performance over the last few years, what it's been doing, as well as what we can expect from the company going forward, and give you an all-round view on the company and its operations. Well, today we are talking about Epack Durable. Now, this is an electronic manufacturing services company, and it was actually incorporated back in 2003. So it's been around for a little over a decade, 2 decades, pardon me. And it started off as a contract manufacturer for, room air conditioners specifically. At the moment, it has 3 manufacturing facilities with clients including Voltas, Haier, Philips, Godrej, Daikin, as well as Havells. and it has in fact now diversified into small appliances since 2013 as well. Well, to give you a very quick and brief tour about how it has in fact ventured forth when it comes to the various segments, back in the calendar year of 2002, it started off its contract manufacturing, and it moved on and entered into manufacturing induction cooktops back in the calendar year 2013. In 2017, what it did was commence operations when it comes to water dispensers, and moving on, coming down to 2018, it also introduced mixer grinders to SDA product portfolio, and finally, as far as 2023 is concerned, that's just a couple of years ago, it also commenced Sri City plant with expanding to the SDA capacity. Well, overall, in terms of size, it's a relatively smaller EMS player. But do remember that a lot of these EMS players have gained in size and momentum in a very short span in time. So I reckon that Epack also stands to potentially gain from that momentum of the sector it is already a part of. Now, what we usually do when we consider all such companies as we rate them on parameters, on various parameters. So we give it a thumbs up, a thumbs down, or a